Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, December 17, 2025, and here is everything you need to know as the markets open for today. Wall Street had a mixed session overnight on December 16th, with the major indices taking divergent paths as investors absorbed softer than expected economic data. The S&P 500 fell by 0.2% or about 11 points to close at 6,819. The Dow Jones Industrial Average declined 0.6% or 302 points, finishing at 48,135. Meanwhile, the Nasdaq rebounded from its recent losing streak, gaining 0.2% to close at 23,111, driven by strength in mega-cap technology stocks, particularly Tesla, which surged more than 3%. Aside from the Nasdaq's resilience, other big movers included Meta Platforms posting gains above 1%, while Nvidia climbed nearly 1%. The overall sentiment, however, remained cautious, as the jobs report revealed a more modest payroll increase of 64,000. Prompting concerns about labor market momentum and potential implications for the Federal Reserve's monetary policy path ahead. Indian-American depository receipts tracked overnight moves in the U.S. markets with mixed signals for domestic investors. HDFC Bank and ICICI Bank ADRs also showed relatively muted overnight performance, tracking broader banking sector weakness internationally. These moves suggest that Indian financial stocks may face some pressure at the opening bell today, particularly given the persistent concerns around currency weakness and foreign fund outflows. Asian markets are trading with caution this morning on December 17th. Japan's Nikkei 225 is trading flat. Hong Kong's Hang Seng is also trading flat, having fallen 1.54% the prior session. China's Shanghai Composite is similarly flat in early trading, after slipping 1.11% yesterday, weighed down by persistent economic weakness, including soft industrial production and fixed asset investment data. The GIFT Nifty futures are currently quoting around 25,932 with a modest premium to the cash market, suggesting a cautious open for the Indian benchmark index. This indicates that the Nifty 50 may look to open with a slightly positive bias, though the overall tone remains defensive, given overnight weakness in Asian peers and persistent uncertainty around global growth and monetary policy paths. On the global front, important developments are shaping market sentiment today. India's exports surged 22% year-on-year in November despite steep tariffs, providing welcome news that the economy remains resilient even under trade pressure. This development provides New Delhi with leverage in ongoing trade talks with the United States and alleviates concerns about a prolonged export downturn. Gold prices have recovered slightly, trading around $4,326 per ounce in the spot market overnight, maintaining strength in the precious metals complex. These global macro cross-currents combined with Trump administration trade policies remain key factors to monitor as traders look for clarity on U.S. economic momentum and India-U.S. bilateral trade negotiations. Domestically, the Indian market is grappling with persistent foreign fund outflows as FIIs continued net selling on December 16th, with an outflow of approximately 2,382 crore rupees. Domestic institutional investors, however, stepped in with buying of over 1,077 crore, providing some cushion against sharper declines. The Indian rupee remains under pressure, hitting near record lows, which has deepened concerns about imported inflation and deterred overseas investors from building positions. Market participants will be watching closely for any policy commentary from the RBI or fresh trade negotiation updates regarding the U.S. tariff situation. The broader market backdrop remains cautious, with indices consolidating after 3 consecutive sessions of losses, and retail participation has been muted. From a technical perspective, the Nifty 50 is forming a consolidation pattern with key support around 25,750 levels. On the upside, the 26,000 to 26,100 zone will act as meaningful resistance, and only a decisive close above this level could trigger a fresh pullback toward 26,200 to 26,300. Watch out for the 25,900 zone as an immediate trigger level for either sustained weakness or recovery attempts. On commodities, crude oil prices have stabilized around $59 to $62 per barrel range, staying contained amid broader risk-off sentiment and stable supply flows. As we head into today's trade, the key theme remains managing risk in a cautious environment where clarity on U.S. growth, trade talks and monetary policy paths will remain elusive. Traders should look to take profits on strength and deploy capital selectively at support levels while maintaining disciplined stop losses. Avoid overcommitting to rallies until we see clearer signals on both global growth and the rupee stabilizing. Defensive sectors including FMCG, telecom and select consumption plays may offer better risk-reward relative to cyclicals in the near term. Stay tuned for the evening wrap and send in your questions and subscribe to this podcast to hear US every day.